Hey everybody, it is great to be back here with you for Swing Trading. My name is Mike Fairborn, Senior Manager Trading Derivatives at Charles Schwab. I'm joined in the chat by a good friend and colleague of mine, Connie Hill. You'll see her in the chat as CH. It's great to have Connie here with us. Folks, it's great to have all of you here today. I wanted to take a look and talk about specifically swing trading and really that combination that we find within swing trading, where we're getting technicals combined with earnings. We are in the midst of earnings season. We'll look at that a little bit, but interesting how we are seeing many of these stocks out here that are showing kind of earnings type follow throughs. Many of them that are, responding positively to the market in terms of earnings, and watching how those take form in potential swing trades. A lot of times that can provide us sort of the power behind the scenes to help push those on up. And so we want to take a look at that today. It is a way that a lot of traders will design their shorter term trades. We're talking about 3 to maybe 15 days or so. So looking forward to going through that with you all. And yeah, just a quick revisit of the chat. We do have Life in the Fast Lane. We've got Robert. We've got JV. Yes, we do. JD, I'm sorry. No, Jay Richardson and JV Texan and Frugal as well. Some new names out there. We've got Paul. Welcome to you, Paul, as well as Will, the guy that does love the sunsets. And Michael and others, Rojo. Great to have you here. Folks, questions, comments, throw those in the chat box, but let's address those disclosures so we can take a look at a few things here. All right. First off, this material is intended for general information purposes only and educational purposes only. Now, options carry a high level of risk and are not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the ITM amount that is in the money amount. An ITM option has a high risk of being assigned early. A short put risks purchasing the underlying stock at the strike price when the market price of stock will likely be lower. Some additional points listed there. Paper money software application provided for educational purposes only. And let's see, we do have investing in risk includes including the loss of principal. Investing involves risk, including loss of principal. And for some products and strategies, loss of more than initial investment. Now, there is no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results, and dividends are not guaranteed. Lastly, a quick look at futures. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. We just look at charts here. They do like me to say that. Just looking at charts here, we do not trade futures. We do have specific classes for trading futures, and that's what we'll be looking at for sure. That's what they'll be looking at for sure in those classes. So having said all that, let's do this. Let's just scroll on down. We don't always do this, but just a quick review again. What do we look for when we're talking about a swing trade? Yes, folks, it is true. In many, many cases, not every case, but in many cases, they do end up being flag patterns, price patterns. You can see the flag pattern right there. We're interested in this range right here. We're also interested in this range right here, also known as a breakout trade for the extension of what? The extension of this green line going from here to here. So that's one beautiful thing with price patterns. They do provide you with a potential target. Okay, it's not a guaranteed target, but it is a potential target. And a lot of traders do like to focus in on, flag type patterns. Of course, some of them that are, when the market is going down, when we have more bearish conditions, they are looking at the bear flag as well. So with all that in mind, we are going to take a look now at just our markets up top here quickly and take a look and see how we're doing here. Folks, are we back? Oops, sorry. Are we back to where we were before in terms of, there we go. Are we back to where we were before in terms of just the number of days going higher? This was an incredible run, really, in the markets, as many of you very well know. And here we are showing strength again today. Now, I did pick up, and one of the things I was looking at it just in sort of some of the potential risk factors out there, because it isn't always the Straits of Hormuz is closed when the markets are making new highs. But I will have to say this, that they were able to get a ship through or ships through. I did take a look at the ship. It was filled with automobiles. It was filled with cars. And so I know that like Saudi Arabia has sent an oil pipeline right through Saudi Arabia so that they don't have to go around the Straits of Hormuz. They opened that up right as this conflict was beginning, and they've been shipping it through there. I know that U.S. is providing oil as well and other energies like natural gas too. But having said all that, look at us here. We are still climbing on up, and that is interesting because we were down a little bit of a sharp move. Folks, I think a lot of that might have something to do with this right here too. And these are kind of connected, maybe you could say interconnected. Gosh, I just covered it up right there. But there's oil. That's down 4.12. Now, I want to go into one of our trades. Barb filled in last week, and I really appreciate Barb doing that. And Connie's filled in for me in the past. I always appreciate Connie's help when I'm out. But Barb did, do a lot of, so she placed some trades. I think she really didn't have anything to review. And we did have one stock that we're still in. So let's review that. It is tied into the oil. Let's just take a look at the oil because we do look at these in this class here. And you can see up top here, this is interesting too. So park this in the back of your mind. We don't know what we're going to get here on the price of oil. What I was thinking is there could be risk to the market if, in fact, we have a major spike up, which we haven't had yet. So this is interesting. If we do kind of go like this and come down below these levels, which was a key level of support, well, the market might start to show. I'm talking about the S&P, I should say this. I don't want to point at this chart because they're inversely kind of correlated right now, right? Pretty clearly. But the S&P 500 could show strength to the upside, just less risk, lower gas prices, which could mean ultimately less inflation, more earnings for companies, all the positives here. So watching that, the one thing I'm watching on the risk side, because we do like to look at both sides here and just let the facts fall where they may, is we did get above 100 and we're still currently holding above 100. Now, if we were to spike like this and go up higher here, that could put risk on the market, but a lot of the energy type companies have been moving up. You guys remember this one from a couple of weeks ago, BKR, Baker Hughes, that is. Oh, let's just pull this guy down real quick. Baker Hughes. And with that Baker Hughes, that was our trade. And you can still see the lines in place for the potential swing trade. And folks, what we've been doing is simply just going flat. We've broken above some prior highs, and we are in fact just flatlining here. So all else equal, some might say, well, all else equal, we could call that a positive kind of sort of formation. Now let me park this in the back of your minds as we're waiting for some video to come through. Just in terms of audio, and just think about this for a second. Now we have switched from time to time from stocks to options in this class. And one of the things we said, as folks, you're pulling that BKR up on your charts. BKR itself, I am back. Sweet. Perfect. When we're looking at that BKR, I don't see it on my side, but I'm going to trust you guys that we are up and rolling. Perfect. Okay, you can hear me. Hopefully you can see me. We should be good to go. Okay. But that sideways move, I'm just going to draw this out real quick so you can kind of see this. And this is what I was referring to. So it's like this. When prices come up and they go sideways here, folks, if we are selling down here a short put, for example, we've talked about this before, and we, oftentimes we'll buy a long put too. I'm going to go back to it now. We're on screen. Okay. We're not flying blind totally. You guys could hear me anyway, so we were good. It was just a YouTube issue. But if we come over here, we would have been doing okay because remember we put this on a couple of weeks ago. We very, very likely would have been doing okay in terms of, collecting premium had we said, you know what, here's a 65 down here. We're selling the 65. We did say that short options could be assigned at any time, but assuming one thing, and that is time going by. Some traders will do this, folks, and we have talked about this before, have we not? We said as we're waiting for a signal to get in or a possible breakout above a range, we can sell an option, that is sell a put and buy a put, and try to collect that time decay over this. And we can also do that if there are risk factors out there too. I still want to tap into that today. And sometimes it's kind of fun to do both sides, right? We can look at both ends of it. Let's just look over here and just see how we're doing. Yeah, see, this is actually still down from our purchase because we're just still in that range, right? We're still sideways. But had we had options in there like short puts, that time decay probably would have been helpful. Anyways, quick note, because there are a couple of different ways to do it. We like to look at both in this class for sure. And so there we go. Yep. You should say BKR up, you guys. And yep, I'm showing us broadcasting it, and we are set and ready to go. Okay. So with that, like I said, comparisons with CL can be interesting. Next one. I wanted to talk about earnings today because earnings can change the direction of a stock. For example, over here, just looking at, we've got this right here, clearly just earnings. You see it right there? You pop up and you kind of wait, but notice something interesting here. That was a bottom. Over here, this earnings was an extension of the trend. Now, when I'm saying it, I'm saying these are like positive earnings events. This one was good, but we also rallied up. We probably had the second leg of maybe a swing trade there. Do you see it? Of a bull flag right there. We have consolidated again, and this could be interesting if we look at it. Now, you got to say we're sort of challenged around 50, but this is DuPont, and I was reading, this is a chemical company. Now, I know they do fertilizers and other things too, but something like 20, 25% plus could have been 30% or more of fertilizers and things. Some of the chemicals are being blocked in the Straits of Hormuz, which is interesting. Maybe putting a little bit more demand on U.S. companies that can deliver, that don't have to go through that the Straits of Hormuz, for example. But look at this with me. We've talked about this before. There's earnings. Remember this? I got my daily 35, daily 30 and 5. You can use any time frame you want, really. I'm just going to throw those in just so you can see them. But that is the spike. That's the earnings spike. And a lot of traders will say this. Okay, fair enough. We see a sort of a swing trade developing here short term. Now, we have to look at it just in terms of the swing trade itself. So, say, for example, we have a move up, and could we see, because that's kind of actually still a big move. That's like a little over 5 points if you're looking at from the top to the bottom, maybe 5.5, 6 points. You're getting up there for this kind of a move. We've talked about sort of minimizing risk on trades like this. And by the way, it just so happens right now as we're looking at it to be giving us the possibility of a close above the high of the low day. But you know what we're going to do? We are going to wait for another 15 minutes. We're just going to watch this live. Kind of something I've done in actually, although we don't teach futures here, something we do in some of the futures classes. I want to get this bar, we try to do, potentially you can get this. We have a much higher likelihood of doing this when we're looking at like a 30-minute time frame. But can we get a close above the high of the low day here on this, right? Big earnings. They did beat earnings expectations, solid volume. If you take a look at this group's been doing quite well in terms of long upward trajectory of trend. We're simply looking at a real short move. Now, some would look at it as a longer term move, but I'm looking at it as this kind of up towards the prior high, which would then put in some more points in here, maybe a few more points, right, to the upside move. But we're going to take a look at this in 15 minutes. We're going to let it develop and see if we can get that hold in here, because what's the hold again? Close above. You guys know it so well, but we do have some new names in here. So just getting everybody on the same page. Close above high of low day. You see the low day? Low day, low day, low day, low day. Okay. But guess what? We had another low day right there. We didn't have a high above that low day until right there. I should say, when we say day, we got to substitute that for bar. Cahob. How does that sound? Not nearly as good as Cahold, but it is a bar because it's not a day bar, it's a 30-minute bar. So the question is can we hold above that and can we see some strength moving? This is a fun one to kind of look and see if we can place the trade here, the paper example trade here just live in our discussion, okay? A quick note too, when you do get an earnings event, what some traders will do, not all of them, but when you get volume, bigger volume, you're not going to see that because there is some massive volume over here. But if I just zoom in, you'll see that volume's picking up today. It'll probably be a bigger day than we've seen in the last month or so, right? What some traders will do is they will say this. take the high, take the low of earnings. Lots of volume down here. If we can start breaking above that level, they would say that gives shorter term indication that we're ready to go higher. Um, if it goes below, let's use red, they say, don't touch this. It might go lower. One of the things that could help influence us going higher, well, we're getting a short-term flag intraday, clear. We just looked at the 30-minute, right? We saw that 30-minute flag. Interesting. Possible close above the high, the low bar. Next, breaking highs. Next, we beat earnings and the market's following through. And we also have that longer term trend coming up too. That's a few positives. We're also closer to the upside move too with the target. So that's a short term swing trade, folks. This could be something like this. How long did it take to develop off the bottom? 1, 2, 3, maybe 4 days, 3 to 4 days. What did we say about some of those swing trades? Well, they are as low as 3 days. Everybody with me on that? Do you guys ever trade this short a time frame? It still fits a swing trade time frame, but I'm just curious if you do. By the way, there's a survey in the chat. Thank you, Connie, for making extra notes of that. Folks, if you're able to fill that out, 2 questions, that's it. And any comments. I do love the comments because then I can fill topic requests there as well. So me, manager, we both look at these. And okay, TLS says yes, and that's kind of the one we're going to look at. We're going to have a different sort of a potential risk and reward view of that 30-minute once it begins to form, though. Okay, so park that in the back of your mind. It's not going to be like the daily. We're going to use tighter risk parameters, all else equal. I think you've seen that before. But there is the survey link. While I'm at it, shoot, I might as well just show you this too. Please, yeah, if you're able to, we want you to subscribe to our Trader Talks channel. We are getting close to the 200K mark right there. Pretty close. If you're not already joined, love to have you on there. You get access to everything we've got here, playlists and whatnot. This is a link. If you're able to join, we'd love to have you join. And there we go. Yeah, in addition to that, quick note up here as we're talking about earnings, did post this. Be sure to check out Connie on her X handle, Connie Hill CS. Here's mine. Just going to throw it out here because we had some economic numbers this week as well. Tuesday, JOLTS numbers. Okay. Thursday, Friday, this might be the biggest one of the week right here, just to be mindful of. But yes, this is from Schwab down here in Schwab Trading. We have quite a few. If you want to have access to this or you haven't seen it yet, feel free. You can go on Schwab Trading, or I've got this here. Definitely post yours as well, Connie, so they can access that too. Okay, that's that. Let's hop back and as we're waiting for this to go, and let's look at another company. Now, thinking in terms of maybe, let's just do this. Let's talk about the risk side first. Let's try to control maybe, or let's be mindful of risk. Make an effort to try to control risk out there. Healthcare. Look at this company. What do you see with it? Is our earnings tied into it? Yes. And as I'm diving in deeper into earnings, a lot to show you on this is a longer time frame one, but it's still a swing trade nonetheless. I'll explain here in just a second. Before I hit that though, Analyze tab, earnings right there. Look at earnings. This is what you get to see. Now, unfortunately, this one throws everything out of whack because this is looking at 8 quarters. It's really quite cool to look at. But one of the things you can spot over here, if you take this out, this is kind of throwing off our earnings numbers, but I am on earnings. Let me brighten this up just a little bit. There we go. And you can see how we've been doing actual numbers versus Wall Street. You're not going to see many that look so close. This is throwing it off again. But we have been beating. We beat again. We didn't beat there, but we beat here, and we beat here. So looking at the company, I'm just looking post earnings on a lot of these beats. A lot of these were forming some bottom. That's kind of a little bit of a flag. But we'll just see what we're getting. This is right before the earnings announcement. Folks, what's fascinating here, you do get to see like the 5 days before and the 5 days after with the day right in the middle. Okay. This has been kind of a turnaround company as they've been building back up their inventory of drugs. Bristol Myers Squibb. Now, when you see this, you might say, that's interesting. You kind of have to back away from it. I do that from time to time. I'll just go to a weekly chart or whatever, but just to highlight this, do you see the potential flag pattern over here? Look where we're holding. How many times have we shown this? Prices come up, and okay, let me just redraw this. Sorry. So you have some moves up here. Prices come up and they kind of consolidate where? Prior highs. Let's just draw it right there. Look at that. Boom, 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 right through there. Okay. Earnings, post earnings. Do you see maybe a support level there? Now, we don't have a bounce yet, but some, as they are anticipating the stock price to bounce, they might revert back and just say, well, are there opportunities here to maybe sell a put to maybe start a position at a lower price? If I get assigned and also get a premium to pay for it too, I want to look at that. And by the way, I want to tell you this here too, because I looked at this on the money flow side and I said, you know what? There's a couple of things to kind of consider here. You had some pretty big, there's money flow, right? That looks at accumulation and distribution potential by combining that volume, buyers and sellers combined. Now, when it makes new lows, we're very mindful of negative and positive divergences. That broke lower. We had some sellers come in after what? They gave up after a fairly large run. Okay. We made a new low. Prices higher low, money flow lower low. This is what's referred to as the progression of money flow. What are we seeing? It's not too unusual. I'll tell you one thing that did it. And this volume right here, it can be quite misleading. It had a massive decline here. What happens if you get some big fund managers that are willing to say, okay, I'll sell 3 million shares and you buy 3 million shares or something like this? Well, guess what? You had a buyer and a seller that offset the trade, but it still counts for more volume. You have to put it in context. And so what I do, what a lot of traders will do after a big spike like this is just take this into consideration and say, okay, fair enough. You got a new low. Now we're coming to a similar low right here, but notice closely what else you're getting. No more volume spikes. Can I draw a diagonal line coming up? Kind of. Getting slightly better at that, but you can see that it's a higher low accumulation post positive earnings. They beat earnings and the market responded nicely. Of course, it has been a volatile market. It pulled back down right to that range. Long story short, maybe some traders might be waiting for a close above the high low day, perhaps a move to the upside, right? They could be looking at that. That could be a potential consideration for prices going up. We don't know. But what we can say is, well, while we're waiting for something, let's just come down here and say, well, what about these levels for the possibility of at least trying to collect some premium? I've got about 4 minutes left before the end of that bar on DD DuPont. So let's do this next. And let's just state this too. If we were to sell down here, I'm going to pull that back up again because I think, oh, that's perfect. Sometimes if you adjust that y-axis, what you'll find is that it will give you the strikes that are listed here. The potential strikes. I think these are the strikes. I think they're at 2.5 wide. Anyhow, if we were to go over here and say, well, would it be interesting? I don't know. Sometimes traders want to give themselves a little bit of a buffer zone or a range where, again, if I'm selling a put, I'm just going to say 52.50. They can look at a 55 as well, right? But a range where prices can go up, sideways, or down to various degrees. I'll highlight this one a little bit. Actually, let me do that in red because prices are going down. Down even, there's 55, down to 52.50, where a trader would, holding above whatever strike price that is. Those are three ways the prices can go, and we can still try to collect our max gain, which is what traders would be anticipating if it holds above that strike price. We did say that, short options could be signed at any time, but That's the expectation, and generally that's oftentimes what happens. You hold above the strike price, they just expire worthless. So remember, we're building this on that strong upward trend. Bottom line is, let's take a look at it on kind of a down day that could influence some of those puts in our favor. So I'm going to go out to the Junes because we are, let's just narrow this down in time. There's your 5250. You say, Mike, is that enough? Well, maybe it's not. Maybe the spreads are good. It's a smaller price stock compared to maybe what some of us are used to. There's the 55. So if I was just selling a short put in and of itself, let's just click on the bid there for the 5250. Okay, $54. But if it were to go down to that level or near it, let's say there was an assignment, you're getting to buy it a lot lower than it is right now, and you get to collect a premium too. But look at the total max loss. Of course, that assumes that you do get a sign and the stock goes to zero. Not a very likely event, some would say, because this is Bristol Myers Squibb, this is an established company going to zero, but we had to show it. So instead of that, if we were committed in this flag pattern, let's just look at the short put vertical. I'm coming over here to the 55, just a 2.5 wide, which is what we've got. 61 cent. It's actually better than what we're getting here at 54. But look at these risk parameters. Maybe a little bit better. Let's pull it up so we can quickly go through it without missing anything, though. Here you go. So we've got a 61. I'm just going to do a potential risk to reward scenario here. If we can make 61 per contract divided by 189 max loss, we like those losses to be defined under this. It's about a 32% on what could be a longer term move that could also be, like we said, a possible stock setup too. Let's do this. I'm going to go ahead and just do another one. We'll just do two. My credit just shrunk. I'm going to go for a little bit more. There we go. 60. So there you go. So, basically everything doubled from 60 to 120. Always be mindful of commissions in here, of course, but there you go. Max loss, 380, and this is multiple commissions, and I just put it through. Okay? So holding above that level, and we're just saying, kind of like the BKR trade, we want to give it time. Hold within this range, holding here, even going down a little bit for the possibility of a move. Okay, I put that through just to put it under our belt here. But the one thing I wanted to say too, remember we talked about the 1-to-1 ratio relationship? That was like 60. So if the stock price goes up to, excuse me, if the the spread itself goes to 120, we could close that down. I'll put that in after. Um, I just want to jump back to this one real quick here while we've got it. But that's that trade, okay? So again, patience, letting it unfold because it might be something bigger there. Let's go back to our DD trade and just see if we did get it close above the high to low day. Folks, we did, and it was a decent size close above the high to low day. So here's the deal. We're going to put this as the potential exit level. We talked about the stops, right? Right there. Boom, right there. Below this point, and our target's going to be higher, but we're going to be carrying a shorter term exit potential on this using stock. We're going to give it a little bit of time, but again, this could be the 3 to 4 day move we were talking about before. Let's set it up right now. I'm going to go ahead and off this move, I'm going to use this bar. I'm going to make it a little bit more conservative. Okay. Let's do this. I'm going to go here, click off the bottom. We'll raise it to the top. Come on, baby, raise. There we go. Excellent, right there. And then that's kind of our initial flag. Again, this is a bigger move for this company, but it's earnings. I'm going to duplicate it so you can see it right there. So there's our target. We're targeting that, but our risk potential is going to be substantially smaller. Potential risk, right? We're mentioning that, but on the stop. But if it were to go down like this, below that level, we can have an exit somewhere below here. So in other words, potential risk, much lower. Potential reward, according to this, much, much higher. In fact, if I take this sort of a box range, I could say there's probably one here, here, and maybe even here, maybe a 3-to-1 move. What does this look like though? This is always important to do. If we were to get in here and we do 100 shares and it breaks lower, let's just see what we're looking at there. So that right there, folks, is down 76 cents. I'm just, okay, let's just say a dollar. Why don't we just go a full dollar? We'll give it a dollar range from that entry. Yeah, just above 48. It does kind of vary in here. I do want to look at an ATR just to see what that ATR looks like. Okay, let's just say, yeah, about 48.35-ish. But look at the upside. To the upside, were we a 3-to-1 or more? Look at that, little over 4.5 for just that target. Now, some traders might want to wait for more, but that's just an intraday kind of a setup. I realize it's short term. We don't get to see these all the time, but we can do it here. Now, this ATR is going to be set on a 30-minute. So here's our average true range to give us an idea too of what this looks like for potential exit level. So that's 44. And what were we doing? You take the ATR and we do this. We say it has to go 2 times the average range of these bars, the average true range, the average range of the bar. So times 2, we're looking at about like 88. You could say, that's not a 6, that's an 8. You could say approximately a dollar. So we're close to it, but that's about 88, 90, somewhere in that range. Okay? We good there? So let's set it up. Let's go over here into our trade by custom OCO bracket order. Okay, we'll just go with 100 shares here as a round lot trade. We'll keep that fine listed over here, but we got to set these up. So this one was substantially higher. I'll just say I'm going to adjust that on the chart, but let's go down here. We can do this too. Watch. I'll just set it at 90, and this is one way to do it. If we pop up our calculator and we say if this is our entry price, so 49.40 minus 0.9, or it was like 88. There's our ATR. Perfect. 48.50. It is below our prior lows. It's a 2 ATR stop. It's a 2 ATR for that stop level. 48.50. We were close, but remember, we're not risking actually even more than a dollar, about 90 cents based upon what we're looking at here. There we go. 48.50. Confirm and send. Let's look at our dialog box here just to see it. Okay, that's our trade right there on DuPont. I'll send it through so maybe we can get a fill a little bit quicker. All righty, so that's an example. Now I've got to adjust this. Ooh, I set that too high. So I just dragged down the y-axis so I could just quickly go like this and say, there's my target, or somewhere in there. So now we can watch it. But folks, that's unfolding as part of maybe a longer term move. Again, we don't do this very often, but it is earnings, and within earnings, there are short-term swing trades that do unfold that traders are looking for. Nothing's 100%, but we wanted to give you that example today, okay, of that. Now, let's continue on. What about eBay? eBay is, okay, so this one we had traded previously, and I think once for sure, maybe a couple of times, there was the swing trade where we did hit our target. So this trade was, in fact, yeah, I think we did a swing trade. Remember that? A swing trade was developing, in other words, a flag within a larger term flag. I'll draw that longer term. It was like this in red. Do you see it? They both reached a similar target and we hit it. But now here we are. This was an interesting one too. I sent a little tweet out on this yesterday. It was fascinating because GameStop, you guys are familiar with GME, they put in an offer to buy this company, which is a lot bigger than them. It's like 70 or 3/4 the size bigger. Hang on, I'm just going to post this real quick, just so I'll just show you guys real quick. I'm just going to scroll down just to show it to you. This was it right here. It was kind of interesting, but it's this. So bidding about 56 billion with an offer of 125 a share. So think about that. 125 on eBay, target. GME about a quarter of the value of eBay. So a lot cheap, a lot smaller company. What did it do? It was shot up, and then I don't know if what happened, if the company didn't take it or whatnot, but again, earnings related. How do we look on earnings? Analyze tab. This company's been doing a really good job. I'm not thinking necessarily that could be a driver behind the scenes, 125 target, but those buyouts, folks, they don't always unfold. I think you guys know that. I certainly do. I've seen them unfold sometimes, but on this case, I mean, in this case, it's a much smaller company, so I'm not sure. But notice a constant theme. They've really been outperforming. In other words, actual earnings have been beating Wall Street expectations. Share price has been climbing higher. There's our fill vertical on BMY. Okay, so we got those two trades under our belt here. And there you go. Now, notice this. What if I said this over here? That's a big round number. That would be 100. We're still holding above 100, and we did break out. We broke out once, we broke out twice. We're kind of holding in that level. eBay did beat earnings, and they have had a history of beating earnings for the past, look like 8 quarters at least. So let's look at eBay. By the way, money flow on this very strong too, with the trend. Um, RSI has been showing some strength as well. Price has been going up. So let's do this. Let's look at eBay. And I wanted to look at maybe on this because it is volatile. We just placed a stock directional trade, right, on DuPont. But let's do this one in that example. But why don't we do something like this? We might, some of us might say, as traders and just in general, they might say, well, there could be support at 100. We bounced around a 100 level, but given the situation in the market and the volatility, let's just see because what we're getting in terms of premiums, a lot of times implied volatility shoots up ahead of earnings, and sometimes it can dip sharply, but sometimes it goes down nice and slow. In this case, it went down a little bit slower. Look with me, look at on the trade. Okay, look at this. Let's just examine this. A 100 short put and a 95 long put. What is our risk reward percentage relationship on that? We're still looking at, there's just not enough days left in the March. Of course, we could go out a little bit further, but just looking at June, here's 40 days. A lot of times we'll look at 44. We're looking between 20 and 50. But coming down here, here is our 100. Okay. Spread's actually okay. Let's just see what this looks like. Close to 5 million shares traded on eBay with that long upward trend. I'm going to click on the bid here, control, and ask 80 cents. 80 cents right here. Clicking on the 80, how does this compare to our potential risk, right? The risk on this trade. Well, the risk 170, 80. Better numbers in a sense. That implied volatility is a little bit better than some we might have seen in the past, no doubt. I'm just going to see what that percent return is. Our potential return versus the max loss, that risk reward relationship. So 80 divided by 170, yeah, getting close to 50. So not too shabby, all else equal. You could try to shoot for more in here, but that's what we're looking at. Max gain, max loss right there. I'm going to go ahead and just send it through. Okay, so I've got that one under our belt, giving us a range again, a range, sort of a buffer zone around a level where there has been what? Well, we'll just call it support. Okay. Big round number. Sometimes we found it's tough to get through those, but then also once you get above it, you might end up holding above it too, right? And so there could be a barrier in here, but this was just sort of a kind of a, set the trade and see how that does unfold with that kind of a return potential on the max loss level. Okay. I've got by the way, quick note too, deltas, a delta number is factored based upon, $1 change on the underlying stock. If the stock were to go up $1, there's your delta right there. So that's also known as an expectation too. So the expectation is on the lower end of the range, right? We've said 20 to 40 deltas, 0.2 to 0.4. I'll just say 20 to 40. There we go. we're right in the middle of that at about a 30, but we have taken an extra measure, right, to control that risk. And there you have it. All right. So that's that. I'm going to leave you with look at, well, here's a couple stocks, and then we're just about set ready to go in here. FTNT, another company. Now, this is fascinating. It's breaking out over a long-term range. The quick note I have to tell you is that it is not above earnings just yet. I mean, excuse me, we haven't reached earnings just yet, is what I'm trying to say. Price is above the range. We haven't beat earnings. Look at that. Shoot. There we go. If I can draw this straight. Why is that doing that? Right there. So we just broke above. We've been down here since October, September of last year. Maybe one to keep an eye on. It's a longer term move. And sometimes it takes this much and it takes some positive earnings over here, folks. Some positive earnings right there. See the earnings? Development to make it go higher. Little smile there. No, but watch it. Just see what you get. You can check this too. Remember, analyze over here. How have these guys been doing? Is there an expectation they might beat earnings? Things can change from one quarter to the next, but we will say this with FTNT, they've been beating for a little while now. And notice this is beautiful because this tells you one other thing. Folks, what has the earnings trend been? We've been looking at the trend of the stock. We look at that a lot. But what do you see with earnings as well? Tell you what I'm saying. It's not as nice as a stock chart because you got these little earnings notes. Generally speaking, wouldn't you say that's a higher high and a higher low? Earnings, folks, are doing what? Up. Cool. Use this. It's a great thing to have to check where the company beats at and exceeds, as well as that earnings trend. It's so quick. I mean, it's like 2 clicks away. And once you set it up, it's literally 1 click. See? Click, click. I got it already there. Earnings have been going up. Like I just said, sometimes consolidation through earnings can take a while before you're ready to go up, but the expectations are that it might move. So keep a watch on something like this. One last one, and then we're all done. I'm just going to highlight it here, but take a look at this one too. Datadog breaking above some highs over here too. Pull up the earnings and see what you got. A long-term trend line break, double bottom, and just breaking some highs right now. Another earnings to park it there. Folks, today we looked at how earnings and technicals can come together with that swing trade, with the trend. So thank you so much for your help in the chat today, Connie Hill. And it was great to be with all of you, as always. Love to be here and go through a lot of these trade examples, but really appreciate the feedback you guys have had. Have a terrific day. And remember, there is a survey link in the chat. Hat tip to my production team for reminding me of that. Absolutely. So there's a survey, and Connie's parked that down below. But yeah, if you're able to do that, just 2 questions, topic requests in there as well. If you have any feedback, I'll look at it. So will my manager, Scott. And folks, really appreciate y'all seeing you again. Thanks so much. Thank you, Connie. Take care, everybody. See you next time.